Bank of America has decided to settle in a case where they targeted African Americans and Latinos across the country, which was originally Countrywide. That was the company that did it. Bank of America acquired them. They have decided they're going to pay $335 million in that settlement. We'll get back to whether that's a big number or not in a second. And why are they going to do that? And who are they going to give it to? They're going to give it to over 200,000 African Americans and Hispanic borrowers who had to pay higher fees and interest rates than non-Hispanic white borrowers with similar credit profile. Now, that similar credit profile is very important. So if a white guy and a black guy walked into Countrywide, based on nothing else, their exact same credit profile, they would give the black guy a higher interest or subprime loan that 2 or 3 years later exploded. So give examples. They start with a 5% interest rate. Okay, that's kind of doable. All of a sudden, 2 years later, oops, it's a 15% interest rate. And then when they can't pay it because 15% is outrageous and nobody can pay that kind of a... First of all, they take so much more money from them as they try to pay that 15% rate. They make more money that way. They make more money because they get a higher commission on riskier loans. That's why they did so many subprime loans. And then in the end, they foreclose on their houses and then turn around and go, you see that blacks and Latinos are no good. They're a foreclosure risk, so we have to charge them higher rates in the future. But you foreclose on them because you do an exploding subprime loan to them. Well, before you might have said, well, maybe they do, maybe they don't. Now you can't say that. They definitely do. They just paid $335 million saying, yeah, our bad. When a black or Hispanic guy walked in, we screwed him, and we screwed him hard. And it wasn't just Countrywide. You remember former Chase banker had said this. This is Nicholas Kristof talking about James Sexton, who used to work for Chase. These less savvy borrowers were disproportionately blacks and Latinos, he said, and they ended up paying a higher rate, so they were more likely to lose their homes. Senior executives seemed aware of this racial mismatch, he recalled, and frantically tried to cover it up. So, sad day for you. By the way, you know what else they would do? Prepayment penalties. So if you want to be a good guy and say, hey, you know what? Let me pay off more of this principal so that I have to pay less later, right? So I don't have to pay as much interest. They're like, no, that's a penalty. You got to pay me more for paying early. I mean, real people in this country got screwed in 100 different ways from the banks. Okay, now, you're thinking, hey, that's a big settlement, not bad, right? Well, of course, there's huge downsides. First of all, the banks admit to no fault of their own. They say, oh, well, you know, I'm going to give you $335 million, but not because I did anything wrong. Right. Imagine if they didn't do it. You think they're going to give a $335 million settlement? No, they'd get their army of lawyers out there and make a huge stink, and they'd never pay if they didn't do it. But since our government basically works for the banks, they had them settle in a way that is so in favor of the banks. First of all, get a load of this. The statement says that the people who were robbed basically in this program are not victims, they're alleged victims. And they're not aggrieved, they're allegedly aggrieved. That's what the agreement says. Here's more parts of the agreement. Defendants deny all the actions and claims of a pattern or practice of discrimination. But here's $335 million. Why? Because they don't want to be responsible for more. They're like, oh, we didn't do it. And the other thing is, you're supposed to bring criminal charges here. This is criminal fraud. But of course, our government loves to play patty cakes with the banks. So they're like, oh, yeah, we're not going to bring criminal charges. We do a settlement. And they made so much more than $335 million running this scam, so they give us a little piece of the action back, and we call it a day. To give you a sense of how absurd and ridiculous this settlement is, get a load of this section. The settlement requires Countrywide to implement policies and practices to prevent discrimination if it returns to the lending business during the next 4 years. Countrywide currently operates as a subsidiary of Bank of America, but does not originate new loans. You understand what that means? In other words, Countrywide, you are not allowed to do this anymore. It's a good thing you don't give out new loans, so there's no chance you could do it. Now we've changed the name. It's Bank of America since they acquired you. So, In other words, Bank of America can continue to do this. Only Countrywide can't, but it's irrelevant because Countrywide doesn't give out loans anymore anyway. And by the way, if they 4 years from now, if they want to bring back Countrywide so they could run that scam again, go ahead. This only applies for 4 years. Richard Eskow wrote a great article about this on Huffington Post. And he said, wait a minute, shouldn't this be illegal at all times? Why does this only apply for 4 years? He shows all the downsides of this agreement and how absurd it is. You know, the government did a HAMP program to give you a sense of how much the government is on the side of the banks. That is supposed to be home mortgage adjustments, right? They say, oh, we're on your side. I know we give $7 trillion to the bankers, but we're going to adjust your mortgages. You know who they let run that program? The banks. So you know what the banks did? They did a program called Extend and Pretend. So they would say, oh, yeah, we're helping you out. We're going to modify your mortgage. And they'd have people pay more, and they'd bleed them dry until they couldn't pay anymore, and they go, ha ha, and foreclose on their houses anyway. It was a colossal failure. Why? Because it was designed to be a failure. Because the banks were the ones running it. And they're like, let's suck as much money out of these people that we've already victimized, and then foreclose on their houses. And who decided to do it this way? Of course, Tim Geithner, Treasury Secretary. President Obama signed off on this. Gave $7 trillion to the banks, gave us nothing, right? Instead, let the banks run the programs that screwed us. Now, don't worry, though. They realized that the HAMP program is a problem, and it didn't run right, and that's HAMP, right? So, okay, that's gone. They realized, okay, we're going to fix it. So they have got a new administrator that is going to oversee that program. You want to know who picks the administrator? You guessed it, the banks.